Priya, are stocks and bonds correlated at all right now? Because it was easy to blame higher Treasury yields when the Nasdaq was selling off, but really that hasn't matched up lately, and especially on a day like today with higher yields and better performing tech.
Right. I'd say that correlation is all over the place. And every time you're at a point where the central bank is changing policy, either going into easing or coming out of easing, which is where we are right now, I think that correlation becomes very unstable. It can be positive or negative. I would say that there was a period of time right after the September Fed meeting when we were sort of pricing in removal of stimulus. Real rates were rising, and that risk assets don't tend to like it. The move in the last week has been much more about inflation, stagflation. We're calling it modflation because we're not really sure we're stagnating here. It's just moderating. But I think this is the point where the rise in rates has been led by inflation expectations, not real rates. So that's allowing equities to do well. But I do think that if rates continue to rise, all driven by inflation, it's somewhat self-limiting. Because at some point, the Fed is not going to respond if this is all just supply chain, if it's supply-led, even oil price increases. So I do think that we're going to come to a level where interest rates will stop increasing. But to your point, Sarah, on the correlation, I think it is all over the place. I don't think treasuries necessarily will hedge equities as well as they have in the past.
Steph, you mentioned earlier that you kind of used the volatility to top up or take profits when things get really out of whack. What has been the most stark example of that in your trading over the last week or so?
Well, I'm tempted to take some profits in Diamondback Energy, as I mentioned before, because it's up 117% year to date, and it's just exploded most recently. But they're actually buying back. They just announced an accelerated buyback program. And so to me, of $2 billion. And so to me, I just want to ride that wave for a little bit of time. Plus, they've been so disciplined, which is so unusual, but they've been so disciplined in terms of CapEx. So that one is definitely on my radar. On the margin, Wilf, I've actually been trimming FANG because I just feel like they may just sit here for a while. So I'm underweight Apple, and I'm actually underweight Amazon now. Took some gains earlier this week that I had. But for the most part, I'm looking for opportunities where you see weakness on earnings. Silly season is silly season, right? It's earnings season. And I say it because stocks act really funny around numbers. So I like to take advantage of that where I really have strong conviction. We were talking about Active before. That stock always acts poor on their earnings. It's a buying opportunity almost 100% of the time. So I'll be looking to buy some of that. I'm hoping if I can get a Costco down 5% or so, probably not. But I'll look for opportunities to buy, for sure.
What about some of the other losers we've seen off earnings? Nike, FedEx, Bed Bath & Beyond, yeah. all of those took a hit.
Okay, so FedEx, they haven't been able to execute for years. They bought TNT many years ago, and they still haven't integrated it. TNT and FedEx are pricing competition to each other at this point, which is really crazy, right? So I think FedEx has some issues. Nike, the only problem with Nike is that it's the Costco problem, right? It's trading at a very high multiple. But absolutely, I would be looking at those two, the Costcos and the Nikes, the compounders, if they were to pull back. Coke is one that's lagged, looking to buy more of that. So I just want to hear what these companies have to say. We want to see if they have the pricing power that I think that they do, and so we'll definitely look for the looks at during earnings season for sure.